morning, Trinidad and Tobago, and welcome to the Bourse Report. Well, today we'll be looking at one of the more hotly discussed topics over the past week, and we're talking, of course, about the mid-year review. What's in store for investors in the coming months and year ahead? Has our revenue and expenditure been on track, and is growth still on track for the projections, or is it going to be derailed by certain recent developments? Let's take a look. And in terms of the growth forecast, we can see that for 2019, projected growth for the country is still estimated to be around 2.2% by the Ministry of Finance, growing again in 2020 by 2.5% and 2% in 2021. Now, this contrasts somewhat with the IMF estimates of 0% growth in fiscal 2019, 1.5% in 2020, and 1.7% in 2021. That divergence gets a little bit better as we go out further. What's underpinning these growth estimates? Well, according to our projections from the full year, or rather the budget's full year projections, that growth is going to be underpinned by growth in the energy sector, in particular natural gas production. And as we can see, for the first 5 months of the fiscal period, gas production averaged just around 3.6 billion standard cubic feet per day, which is fairly consistent with the 3.6 billion standard cubic feet in the prior comparable 5-month period. Now, for fiscal 2019 rather, it's estimated gas production is estimated to be around 3.8 billion standard cubic feet per day. And for the first 2 months of the year thus far, it has in fact averaged just around 3.8, with production eventually ramping up in 2020 and 2021 to just over 4.05 and 4.14 billion standard cubic feet per day. Now, will those projections be met with certain recent developments in the gas markets? And of course, we relate to, or we refer to BP's announcement of some unsuccessful results, or disappointing results rather, in terms of their production and drilling activities. Well, only time will tell. Now, in terms of where money is spent and where money is earned, at the half-year point, it seems as though the country is doing better than estimated. Half-year revenues was budgeted at just around $20.8 billion, and it came in at just around $21.5 billion, or a $0.7 billion or $706 million better than estimated projection. Expenditures, on the other hand, were restrained, whereas we were supposed to spend, or the country was supposed to spend, just around $26 billion. That figure actually came into around $23.4 billion. So the half-year fiscal gap, which was projected at around $5.1 billion, has in fact narrowed, or by most recent estimates, to just around $1.8 billion. That being said, the full year projections are a little less than stellar. Revenues are actually projected to decline for the fiscal 2019 period from $47.7 to just around $47.5 billion, or just around a $200 million decrease. And expenditures are in fact expected to increase from $51.7 to just around $52.07 billion, or a $300 million increase. Now, what does that mean? Well, the fiscal gap, or how much more we spend than we earn, is expected to widen from just around 4 billion TT dollars to around 4.5 billion TT dollars, and expressed as a percentage of our gross domestic product or economic activity, that is going to widen from 2.5% to just around 2.8% projected. Now, importantly for investors is how this gap is going to be funded. Will it be from the sale of assets, state assets? Will it be from the drawdown of savings or national savings, or will it be from borrowing? Well, one of the measures that has been announced is the issuance, or the pending issuance, of a 5-year housing bond to the tune of just around 1 billion TT dollars. Now, this bond is going to be for a 5-year term, as mentioned, and is going to offer investors a rate of just around 4.5%. How does that stack up in comparison to the market in general? Well, Government of Trinidad and Tobago bonds right now are yielding just around 3.6% based on the most recently released yield curve. And in comparison to one of the more notable or more memorable issuances in the past year or so, NIF Series A, which was also a 5-year term, offered a 4.5% coupon and yield, but it was also tax exempt. So for corporate issuers, that means that the yield would have been as high as 6.4%. All other factors held constant. One of the things that was not mentioned but may have been looked forward to by investors both locally and internationally was the matter of Petrosian and its looming refinancing of the 2019 bonds due in August. Now, as investors or observers may recall, there's an $850 million bond of Petrosian which is set to mature in August of 2019. And there was an exchange offer recently put forward to the international investment community with a proposed exchange of these old bonds for new bonds. Now, just around $152 million worth of bonds, or US dollars worth of bonds, did accept the exchange offer, which means in at the end of August or in mid-August when the bond matures, Petrosian will need to find just around $720 odd million, or around the equivalent of $5 billion TT, to repay investors who opted not for the exchange. So as we expect over the next few months or weeks, more and more information should be released about that to provide some clarity to investors, as well as give some signal to the prospects of the company going forward. That's it for this week's edition. For more information, give us a call at 226-8773 or 2-BORSE. Visit our website at bourseinvestment.com or email us at invest@boursefinancial.com. Have yourselves a wonderful investing week. This has been the Bourse Report.
This good girl.